Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Tuesday, the 14th of April, looking at dollar yen, which I find is a really interesting chart at the moment. We've seen that dollar yen is starting to roll over once more. That recovery that we saw, the crossover of March into April, has just sort of lost its way. Little negative candles starting to build and then beginning to actually accelerate to the downside in yesterday's session. It certainly looks as though 107.70 is once more, which is that reaction. Sorry, 106.90 is once more a key level that's likely to be retested. You can see that through the hourly chart, where throughout last week we were talking about this, the development of this recovery, and it was holding up support around the 108.70 mark. But as soon as we started to lose that support consistently, that the market started to become more negative, and you can see that around 60 on the hourly RSI turned into 50 on the hourly RSI, with the rallies were faltering and now sort of under 50. So we've seen the MACD lines on the hourly going below neutral and rolling over once more. Stochastics also bear crossing around their neutral point is never really great, and it certainly seems as though we're building now this run of lower highs and lower lows, looking like a retest of the 106.90 level of the support from the 1st of April is becoming likely now. Given the fact that we've rolled over at 109.40, 109.35, 109.40, that the momentum indicators are all sort of starting to also turn a little bit more corrective. Look at those MACD lines. They were basically flattening off through the back end of last week, just before Easter. Well, now they're beginning to pull lower. RSI beginning to pull to the low 40s. Well, that's similar to where we were back in early April, and a downside break below 40 would be certainly a negative signal there. Stochastics also already sort of starting to turn towards bearish. So certainly looks as though pressure is mounting on that 106.90 level of support, and a breach of that, well, we're sort of looking 50% fib level, and then back at all these old lows that I can sort of open up here from August, September last year, and you start to think about more corrective moves. So it certainly looks as though that the negative aspect of dollar yen is starting to take hold once more, and it doesn't really bode especially well for risk appetite, broadly speaking. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website where you can sign up for our webinars.